and prevented the US from defaulting on its debt, with traders awaiting the FOMC May meeting minutes tomorrow and the core PCE rates on Friday. Furthermore, at the time of this report, it appears that the shiny metal is moving in a downwards fashion. In this report, we aim to shed light on the catalyst driving the precious metals price and assess the future outlook. Since last week, legislative leaders appear to have made progress in reaching an agreement to raise the debt ceiling limit as we rapidly approach the so-called X date. Despite lawmakers such as House Speaker McCarthy and President Biden both stating that the meeting held between them was productive, with some progress being made on reaching a deal, the two sides have yet to find common ground on key fundamental differences. Few examples of issues of disagreement include raising taxes and closing tap loopholes for oil and pharmaceutical companies alongside the spending allocation assigned to military operations. As a result, should negotiation break down, we may see heightened market volatility due to the imminent deadline upon which the US may default on its debt. Once again, we reiterate the potential scenario where should the US fail to uphold its financial obligation, it would most likely lead to the nation being downgraded by credit rating agencies, followed by a mass sell-off of US debt, which could potentially spark a US stock market crash, as the financial industry remains on thin ice. In the event that the debt ceiling standoff continues, we may see market sentiment shift away from the optimistic outlook of a deal being reached, leading to traders getting anxious that they may be overexposed in the US markets. This might lead to the bullion receiving safe haven inflows, given its status as a hedge during times of financial instability, hence moving the pressures to higher ground amidst economic and political turmoil. One may be excused for forgetting that during tomorrow's American session, the FOMC last meeting minutes are due to be released. Therefore, given the recent dovish rhetoric from Fed Chair Powell stating that Fed's policy rate may not need to rise as much as it would have otherwise to achieve our goals, could imply that the Fed may be nearing its peak rate or may consider keeping interest rates at current levels. Hence, given the slightly dovish comments from Fed policymakers, whose comments may be attempting to prepare the markets ahead of release of the meeting minutes, may indicate that there is growing pressure towards the Fed to pause rates sooner rather than later. Furthermore, in combination with the core PCE rates on Friday, which are expected to decrease, we may see the pressures gaining on the back of a weaker dollar, potentially bringing the bullion back above the $2,000 key psychological level. On the other hand, should the FOMC meetings take a more hawkish tone with the indication of prolonged rate hikes, in addition to the PCE rates coming in higher than expected, we may see the pressures losing further ground in its battle against a stronger dollar. Thank you for watching.